It's Cash Money Master once again, and I would like to welcome you back to my channel where I talk about cryptocurrencies. Now, before I talk about cryptocurrencies, I have to let you know about a currency that we are using, and it's important that I talk about it. And this currency is called fiat currency, paper money. So the difference between the two currencies, which is fiat currency and cryptocurrency, is that fiat currency is centralized, issued and controlled by third parties, while cryptocurrency is decentralized. Transactions are peer-to-peer. Cryptocurrencies exist in limited quantities, while fiat currencies can be issued at will. Bitcoin, for example, is limited to 21 million units. Now, let us find out and break down the difference between the two currencies. Well, I'll start with fiat currency and I'll move on to explain about cryptocurrency. Well, fiat currency is a centralized currency which is issued and controlled by a third party. This currency can be printed and issued by a third party as a third party so wishes. While on the other hand, cryptocurrency is decentralized. Transactions are peer-to-peer, meaning from a person to another. This currency is limited in quantities. For example, Bitcoin is limited to 21 million units. Now, let us find out, seeing that we have used Bitcoin as an example, uh, as a currency, which is a cryptocurrency. Let us find out what is Bitcoin. Well, Bitcoin is a cryptocurrency, a visual currency designed to act as money and a form of payment outside the control of any person, group, or entity, thus removing the need for third-party involvement in financial transactions. Now, that's the simplest explanation of what Bitcoin is. Now, if you want to find out about Bitcoin, the history about the Bitcoin, the developers who developed Bitcoin, you can read the Bitcoin white paper. So I'll just read the first paragraph. And if you want to find out about the Bitcoin white paper, you can just simply search it on your browser. Just search for Bitcoin white paper. You will find the information that you need. But here it reads published in October 2008, which is Bitcoin. Bitcoin was published in October 2008 by an individual or a group under the name of Satoshi Nakamoto. The Bitcoin white paper laid the groundwork for a fundamental change in the execution of global payments and the transformation of entire industries in terms of data management. Now, yes, these are the developers behind Bitcoin, which was published October 2008. They call themselves Satoshi Nakamoto. It could be an individual or a group of people. This was to change the execution of global payments and the transformation of entire industries in terms of data management. Now, this very currency that we are talking about, it's quite volatile. So let us find out, what does volatile mean? Well, in bullet point number 2, it reads that liable to change rapidly and unpredictable, especially for the worse. It simply means that the price of Bitcoin can continue to change. It can go up or it can go down. It does this from time to time, and it is unpredictable. And this could be for the worse, or it can even be for the better. Now, after the developers of Bitcoin, many cryptocurrencies developers came into play. They developed the coins, they were successful, and then they presented these coins to the cryptocurrency market. As we speak, we have over 2,000, if not over 3,000 cryptocurrencies in the cryptocurrency space. With this, I would like to show you the bubbles and how well they are doing. These are crypto bubbles. These crypto bubbles represent cryptocurrencies that are in the market and how well they are performing or how bad they are doing in the cryptocurrency space. To find out about these cryptocurrencies and how well or bad they are doing, you can just simply search for crypto space bubbles. You type crypto, then you type bubbles. Then you click on cryptobubbles.net. You'll then be taken to this page that I'm looking at right now. So the coins that are in the green circle are coins that are performing well in the market. And the coins that are in a red circle, these are the coins that are not doing well in the market. As you can see, the green coins are in the positive and the red coins are in a negative. So I'm just going to read some of the coins that are in the green, and some of the coins that are in the red. We have Wemix, which is up by 7.3%. We have GMX is up by 6%. We have MKR, which is up by 6.5%. We also have APE, which is up by 2.5%. Now we are looking at the coins that are in the range. We have TON, which is down by 2.9%. We have XRD is down by 1.4%. We have Miota, which is down by 1.2%. And XRP is also down by 2.9%. Now let's have a look at some of the factors that affect these cryptocurrencies in a positive or a negative way. Without further ado, I would like to present to you the cryptocurrency headlines from CoinMarketCap. To find out about these headlines, you can just simply type headlines. After that, you type CoinMarketCap, and then you click on headlines CoinMarketCap. You'll then be taken to this lovely screen that I'm looking at right now. Well, in today's news, we have crypto exchange volume hits lowest level of 2023 in September. It says here, despite several significant developments in the crypto industry in September, the monthly volume recorded on crypto exchanges plummeted to the low. It means the crypto exchange volume that was recorded has gone down. The other news reads, weekly coin rundown. ETF reverberations boost Ethereum and Bitcoin. Chainlink and Bitcoin Cash take the limelight. This comprehensive weekly roundup explores recent ETF trends influencing the market, major price movements, and significant regulatory actions. These are some of the news that are the headlines for today from CoinMarketCap. Now let us proceed and find more info about this very currency that we are talking about. Seeing that Bitcoin is a mother of all cryptocurrencies, I need to inform you that Bitcoin has 4 market cycles. It has been created, designed like this. This is how Bitcoin operates. It operates in 4 market cycles continuously. Now, the market cycles have been broken down like this. We have the 2022 bear market, which is the year the previous year. The previous year was 2022. It was the bear market. This means that the price of Bitcoin depreciated. It went down by percentage. I don't know if it was 60, 80%. And other cryptocurrencies also went down in terms of the price to 60, 50% in a negative. And then we have the 2023, which is accumulation. 2023 is the year where cryptocurrency investors invest in cryptocurrencies that are available in the cryptocurrency space. That's what the accumulation year means in simple terms. Then we have 2024, which is Bitcoin halving cycle. This is the number of Bitcoins that are being mined being reduced to half. This is to counteract inflation and to ensure that there is limited supply so that the price can appreciate and cryptocurrency investors have an opportunity to get some of the profits that might be available in the cryptocurrency space during this Bitcoin halving cycle. And then we have the 2025 bull run. Now, this is when the bulls run. When the bulls run, the price of Bitcoin appreciates. As you can see, this is highlighted in green, and green means go. So it means that these bulls are running, they are going up, the price is appreciating. The investors of cryptocurrencies find themselves in a position where they are profitable. So this is the bull run, as I've explained. And let us go and find out about the Bitcoin halving definition as to what it is really, so that we can understand. Okay, sorry about that. Sorry, just a second. I'll be with you just now. Yes, so this is what the Bitcoin halving is. This is the definition. Well, Bitcoin halving is when the reward for Bitcoin mining is cut in half and takes place every 4 years. The halving policy was written into Bitcoin's mining algorithm to counteract inflation by maintaining scarcity. So this is the definition of Bitcoin halving. So we saw in the previous page that Bitcoin halving will be taking place in 2024, but we didn't see the day, the month, the year. So in the next page, I'm going to show you the Bitcoin halving cycle. So to find out about the Bitcoin halving cycle, you can type Bitcoin and then you type halving, click on CoinGecko, then you will be taken to this screen. Now the Bitcoin halving shows that there's 207 days, 21 hours and 51 minutes left until the Bitcoin halving. It says here estimated date and time of reward drop 25th of April 2024 at 11:51. Now that's us waiting for the next Bitcoin halving and estimates as to when will the next Bitcoin halving take place. I hope you are equipping yourself with the information. I hope you are positioning yourself for the next Bitcoin halving so that you don't miss out on potential profits, because we need to earn income so that we can be able to provide for those that we love and so that we can have money to enjoy our lives, because money does bring a bit of comfort when you have more of it and you use it wisely. Yeah, now let's have a look at the importance of having a cryptocurrency portfolio. As you have seen in the previous page, I spoke about Bitcoin halving, other cryptocurrencies. So it's very important that you have a cryptocurrency portfolio, should you consider investing in cryptocurrencies so that you know if other coins are not doing well that you invested in, other coins might do well. And when this happens, the profits that you lost from the coins that did not do well, uh, the profit actually will make up, the profit that you get from other coins will make up for the other coins that did not do well in the cryptocurrency space. That's what I wanted to say. So let's have a look at a long-term cryptocurrency portfolio example. Well, I often talk about BTC. Let's look at another coin, man. Let's look at SBD, which is 1, 2, 3, 4, 5. It's number 5 from the top. SBD, the code is SBD. Excuse me. The amount is 100. The value in BTC is fractions of a penny. USD value is $1.70. The wallet value is 170.34. And the exchange example that was used is Polynix. And it shows that the percentage of holdings, it's sitting at 2.73%. And then we have 1, 2, 3, 4, 5, 6, 7. We have LTC, which is number 7 from the bottom up. It says the code is LTC. The amount is 1. And then the BTC value is 1 cents, or we can say it's 2 cents because it's 1852004. And we have the USD value, which is $32.52. We have the wallet value also $32.52. The exchange used as an example is Polynix, and the percentage of holdings, it's sitting at 0.52%. Now let us read about the long-term cryptocurrency portfolio information that is right before us. It reads, its historical data shows that the crypto market has returned over 900% since 2017. Of course, the journey hasn't been all smooth, as evident from the often unprecedented deep and high trends of the market. But in the long haul, its valuation has been increasing as more investors join the trade. Well, with this in mind, the idea of targeting long-term gains is more appealing than chasing short-term profits, which are often not as much as the former. Well, let us continue and read more info about building this long-term cryptocurrency portfolio. While investing in the long term promises greater returns, it should be noted that the method requires patience and keeping your emotions under check in all market times. To achieve this, you should only invest an amount that you can live without. So no matter what happens, you won't have the urge to sell your cryptos to sustain yourself. Also, having a cushion to fall back on will prevent you from panic selling. Now, why should you consider long-term crypto investment? Foregoing the short-term profits in favor of long-term gains is not only highly rewarding, but also less risky. As such, you don't have to worry about missing out on leveraging into a position or timing the market. Day trading or short-term investment is characterized by numerous transactions whose fees can quickly accumulate and eat into your profits. But when investing in the long term, all you have to do is pick a few cryptocurrencies and then wait. This helps reduce the number of transactions, saving you the fees that come with active trading. As we continue reading, it says here indicators of long-term value. Building a long-term portfolio boils down to the type of digital currencies you invest in. With over 1,000 cryptocurrencies in the market, it can be overwhelming to choose one that pays off in the long run. Here are a few factors to consider when choosing cryptocurrencies for your long-term life portfolio. Now, the cryptocurrencies that you must consider when you invest and have a long-term life portfolio, you need to have a look at the market cap, the utility value, the industry. Make sure you don't get rigged. And then there's a conclusion. Why? Well, you can read this information from forex.academy. You can search for how to build a long-term cryptocurrency portfolio. Click and get onto this site, which is forex.academy. Now, today I would like to read this conclusion. It says, while the above tips will help you build a long-term portfolio, you should note that the crypto market is highly volatile. To keep up with the trends, it demands that you regularly track and rebalance your portfolio in line with your objectives. Also, it's a good idea to keep tabs on market events such as government laws in your jurisdiction regarding cryptocurrencies. These events usually have an impact on price movements. So we did have a look at the market events in terms of the headlines. So as you can see, this is just to emphasize on these important things that you need to consider. Now, I need to go back to this important point that talks about the cryptocurrency market being volatile. And this and the other thing to consider is that there's quite a number of cryptocurrencies, a lot, over thousands of cryptocurrencies, and it can be very difficult to choose which ones will do well and which ones won't do well. In so saying, I would like you to consider having a mentor. And why should you have a mentor? Why is it important to have a crypto mentor? Let us read and find out. A crypto trading mentor can assist you in developing a comprehensive trading plan that aligns with your financial goals. They help you set realistic expectations, establish milestones, and refine your strategies over time. Now let us find out what is a crypto mentor. A crypto mentor, crypto trading mentorship programs have become indispensable resources for individuals interested in venturing into the cryptocurrency market. These programs offer quality education, personalized guidance, and risk management strategies to navigate the volatile crypto space. So, when you have a cryptocurrency mentor, you will be educated, you will get a personalized guidance, you'll be able to do risk management strategies so that you can navigate the volatile crypto space successfully. So education comes with the mentor informing you on how the market is doing, which cryptocurrencies to invest in, and why you should invest in these cryptocurrencies. The guidance would be, this is how you put together your cryptocurrency portfolio, which is the coins that your mentor might have recommended to you so that you can invest in these coins. and you can do a risk management strategy to navigate the volatile crypto space successfully. So as you put together your cryptocurrency portfolio, you can ensure that you invest the money that you are not willing to lose. So I have a cryptocurrency mentor that talks to me and guides me via my mailbox. This crypto mentor of mine sends me videos to communicate with me, to update me as to what is happening in the cryptocurrency space, which is a great opportunity to be able to position myself for the next Bitcoin halving as well as the bull run, because I don't want to lose money. I actually want to make profits. I want to see my investment giving me profits. Now, this is why I considered having a mentor, because I don't want to lose money. I don't want to make terrible mistakes with my money. I want to make a wise decision and get someone who is well experienced, someone who is investing his time in the cryptocurrency space to make sure that I make a sound decision when I invest and put together a portfolio identical to a mentor. So if you would like to find yourself in a position where you don't lose much of uh, the money from the cryptocurrencies in a portfolio that you might have, consider having a mentor so that you can have potential earnings in the cryptocurrency space. So I will leave a link in the description of this video of mine so that you can find out who is this mentor of mine and what he has to offer, so that you can also uh, grab this opportunity and be well positioned to be able to gain profits in the cryptocurrency space. I will also include a video on how to fund your account, which is a Binance account from your bank account, and make sure that you subscribe to the channel, you click the notification bell, you like the video, recommend the channel to your family, friends, colleague, to your significant other, because this information is very important, and I will be sharing this information with you from time to time. In and I would like to conclude with these words: make a wise decision with your finances so that you can yield profits. It's Cash Money Master. I'll see you in the next video. Thank you so much.